Hi, I'm Sachikara. This is the first video for Chapter 2 Managerial Cost Concepts and Cost Behavior Analysis. This chapter explains various managerial cost concepts that are useful in planning, directing, and controlling. It also presents cost flows and the process of cost accumulation in a manufacturing environment. In this video, we will review learning objective number 1, define the three classes of manufacturing costs, and differentiate between product costs and period costs. Let's look at manufacturing costs under managerial cost concepts. Manufacturing consists of activities and processes that convert raw materials into finished goods. There are three classes of manufacturing costs. The first one is direct materials. The second of the three classes of manufacturing costs is direct labor. And the last one is manufacturing overhead. In contrast, a merchandising firm sells goods in the form in which they are purchased. For example, retail stores such as the Bay, Best Buy, Walmart, they purchase goods from manufacturing companies and simply stock those goods in their shops and sell them to the end customers. Let's review the three classes of manufacturing costs, namely direct materials, direct labor, and manufacturing overheads, in a bit more detail. First of the three classes of manufacturing costs is direct materials. Direct materials are raw materials or basic materials and parts that are used in manufacturing process. Let's take auto manufacturers such as Honda Canada, GM, or Ford Motor Companies as our example. They use steel, plastics, and tires as raw materials in making cars. Raw materials that can be physically and directly associated with the finished products are called direct materials. For example, bakeries use flour in the baking of bread. Coca-Cola and Pepsi factories use syrup in the bottling of soft drinks, and steel manufacturers produce steel that is used in making of automobiles. The second class in the three classes of manufacturing costs is direct labor. The work of factory employees that can be physically and directly associated with converting raw materials into finished goods is direct labor. Bottlers at Coca-Cola plants, bakers at McCain Foods, and typesetters at a newspaper press. These are all examples of direct labor. This brings us to the third and the last of the three classes of manufacturing costs called manufacturing overhead. Manufacturing overhead consists of costs that are indirectly associated with manufacturing of the finished products. Manufacturing overhead may include manufacturing costs that cannot be classified as direct materials or direct labor. Manufacturing overhead includes indirect materials, indirect labor, depreciation on factory buildings and machines, and insurance, taxes, and maintenance on factory facilities. Now let's focus our attention on two of the manufacturing overheads that we slightly touched upon in this slide, namely indirect materials and indirect labor in the following two slides. First up under manufacturing overhead is indirect materials. Some raw materials in the manufacturing process cannot be easily associated with the finished products. And these raw materials that cannot be easily associated are called indirect materials. Indirect materials have one of the two characteristics. First, they do not physically become part of the finished products. Or second, they cannot be easily traced because their physical association with the finished product is too small in terms of costs, such as sandpaper and glue. Companies account for indirect materials as part of manufacturing overhead. To summarize, the examples of indirect materials include lubricants, cleaning supplies, polishing compounds, sandpaper, glue, etc., which are all considered manufacturing overheads. This brings us to indirect labor, which is also part of manufacturing overhead. Work of factory employees that cannot be easily associated with finished products is called indirect labor. Indirect labor has one of the two characteristics. First, it is the work of factory employees that has no physical association with the finished product. Or second, it is the work for which it is impractical to trace costs to the goods produced. Examples include wages of managers, supervisors, timekeepers, or wages of maintenance workers such as janitors and security guards. Just like indirect materials, indirect labor is classified as manufacturing overhead. Let's look at prime costs and conversion costs. Recall that we covered three classes of manufacturing costs, namely direct materials, direct labor, and manufacturing overhead. Prime costs are the sum of all direct material costs and direct labor costs. These are all direct manufacturing costs. Let's look at the chart on this slide. Direct materials plus direct labor is equal to prime costs. Conversion costs are the sum of all direct labor costs and manufacturing overhead costs, which together are the costs of converting raw materials into a final product. Let's look at the chart again. Direct labor plus manufacturing overhead, the one in this red box, they are called conversion costs. This brings us to product versus period costs. Let's look at product costs first. Each of the three classes of manufacturing costs, mainly direct materials, direct labor, and manufacturing overhead, these are all product costs. As the term suggests, product costs are costs that are necessary and integral part of producing the finished product. These product costs are recorded as inventory when incurred. Product costs do not become expenses until the finished goods inventory is sold. At this point, the company records the expense as a cost of goods sold. Thus, all manufacturing costs are product costs. Now, this brings us to another set of costs that are called period costs. Period costs are costs that are matched with the revenue of a specific time period rather than included as part of the cost of a sellable product. These are non-manufacturing costs. These period costs are deducted from revenues in the period in which they are incurred to determine the net income. Period costs include selling and administrative expenses. So let's again summarize both set of costs, product costs and period costs. So all costs are divided into product costs or period costs. Product costs are manufacturing costs. which includes direct material, direct labor, and manufacturing overhead, including indirect materials, indirect labor, and other indirect costs. While period costs, which are non-manufacturing costs, include selling expenses and all the administrative or general expenses. This brings us to summary of the first learning objective. In this video, we reviewed 3 classes of manufacturing costs, including direct material, direct labor, and manufacturing overhead. Manufacturing overhead includes indirect material, indirect labor, and other indirect costs. Then we looked at prime costs, which include direct materials and direct labor. We also looked at conversion costs, which are direct labor and manufacturing overhead. Then we diverted our attention to product costs versus period costs. So product costs are all manufacturing costs that include direct materials, direct labor, and manufacturing overhead. While period costs are all non-manufacturing costs, such as selling expenses and administrative expenses. Ready to review? Review number 1? Here it comes. Which of the following is not an element of manufacturing overhead? A. Sales manager's salary. B. Plant manager's salary. C. Factory repairman's wages. And D. Product inspector's salary. The solution is sales manager's salary. Sales manager's salary is not a manufacturing overhead. In fact, sales manager's salary is related to selling of the product. And that's why sales manager's salary is a period cost and not a manufacturing overhead or a product cost. Good job, everyone. Please continue on with the next video. Next video is on the hands-on activity that you will perform with me to put our newly acquired knowledge to work. See you in the Do It exercise video.